All right, everybody, welcome back for another deep dive.
Yeah, excited for this one.
Me too. We talk about a lot of different things on the show, and a lot of times it's like stocks or ETFs or things like that.
Right, more the equity side of things.
But for today's deep dive, we're going to be talking about something that's a little bit different, and this is going to be annuities. And specifically, we're going to be looking at some material that was presented by Diversified Insurance Brokers, and this is on the Reliance Guarantee 5 fixed annuity.
Yeah, and this is a product that comes from Reliance Standard.
Right, exactly. And, annuities are one of those things that, I think a lot of people, maybe they've heard of them.
Right.
Maybe they don't really know exactly how they
Or
work.
I think they get a bad rap sometimes.
Yeah.
They can be complex.
Yeah.
There's a lot of different types of annuities.
Right.
And so it's important to look at the details and see, if it's the right fit.
Yeah, absolutely. So let's start with the basics, I guess. What is an annuity? And then we can get into specifically this Reliance Guarantee 5 fixed annuity.
Okay, so an annuity at its core is basically a contract between you and an insurance company.
Okay.
And you give the insurance company some money, and in return, they promise to make payments to you either immediately or at some point in the future.
Okay, so it's like you're giving them money and they're going to pay you back.
Exactly.
Right. Okay.
And there are different kinds of annuities. So you have immediate annuities where you give them the money and they start paying you right away.
But
And you have deferred annuities where you give them the money and then the payments are delayed until a later date, like maybe when you retire.
so kind of a way to save for retirement potentially?
Right.
Okay, so I see.
And then within that, you have fixed annuities and variable annuities.
Okay.
So with a fixed annuity, you get a guaranteed rate of return.
Okay.
So you know exactly how much your money is going to grow each year.
So it's kind of like a savings account or like a CD or something like that.
Yeah, similar to that.
Okay.
And then with a variable annuity, your returns are linked to the performance of investments.
So there's a little bit more risk there potentially, but also a potential for more upside.
Exactly.
Okay, cool. So this Reliance Guarantee, that's a fixed annuity, right?
Yes, that's right. And it's a single premium deferred annuity.
Okay, break that down for me. What does that all mean?
So single premium means that you make a one-time payment upfront.
You just give them all the money at once.
Exactly.
Okay.
And then deferred annuity, as we talked about, means that the payments are delayed to a later date.
Okay, so I'm giving them a lump sum and they're going to start paying me later on down the road.
And in this case, with the Reliance Guarantee 5, it's for at least 5 years.
Okay, at least 5 years. So it's not like I could give them the money and then immediately start taking withdrawals or anything.
Right, and we can talk about withdrawals a little bit later.
Yeah, we'll get into that.
Okay.
So with this fixed annuity, I'm giving them the money and they're guaranteeing me a certain rate of return for at least the first 5 years.
Exactly, and that's a big selling point for a lot of people because they know exactly what they're going to get.
Right, that predictability, I imagine, is really appealing, especially if you're thinking about retirement planning.
Absolutely.
Okay, but how does that interest rate work exactly? Like, how is that determined?
So the interest rate is set by Reliance Standard, and it's guaranteed to be fixed for the first 5 years.
Okay,
After that, the rate can change annually,
okay.
but there's a minimum guaranteed interest rate that's stated in your contract.
Okay, so even if rates go down overall,
Right.
they can't go below a certain point for me.
Exactly. You've got that downside protection.
I see. Okay, so it's guaranteed for the first 5 years, and then after that it could change, but I know there's a floor, basically.
That's right.
Okay, interesting. And then is this something you could do with like any kind of retirement account, or what are the specifics there?
So you can use this annuity with a traditional IRA, a Roth IRA, or a non-qualified account.
Okay, so if I've got like a rollover IRA from previous job or something, I
Exactly.
could use this annuity for that.
That's right.
Okay, cool. So now let's talk about the flexibility piece because, life happens.
Right.
We might need to access our money sometimes. Can we take money out of this annuity before retirement, or what are the rules there?
So you have some flexibility. You can withdraw up to 10% of your annuity value each year without penalty.
Okay, 10%. So that's kind of like, if I had $1 million in there, I could take out $100,000
Each year.
each year without any penalty.
That's right.
Okay, that's pretty good.
Yeah, it gives you some access to your money if you need it.
Right, if there's an emergency or something.
Exactly.
But what if I need more than that 10%? Let's say I have a big medical bill or something like that. What happens then?
So if you withdraw more than 10% in a year, then you might have to pay surrender charges.
Okay, what are surrender charges?
It's basically a fee that the insurance company charges for early withdrawals.
Oh, okay, so they're going to penalize me for taking out too much money.
And the amount of the surrender charge usually decreases over time. So the longer you have the annuity, the lower the surrender charge will be.
So if I'm like right at the beginning and I need to take out a bunch of money, I'm going to get hit pretty hard with that penalty.
Potentially, yes.
Okay. And then is there anything else besides the surrender charge that I need to be aware of if I'm taking out more than that 10%?
There's also something called market value adjustments.
Okay. What's a market value adjustment?
So basically, the amount of money that you get back when you withdraw from the annuity could be higher or lower than the actual value of your account.
Depending on how the market's doing.
Right.
Okay. So it's not just the penalty, but it's also like the actual value of my account could be different.
Exactly. It's important to keep that in mind.
Okay. Now, I do remember seeing something about a nursing home care waiver. Talk about what that is.
Yeah, so that's a really great feature of this annuity.
Okay.
If you need to go into a nursing home for extended care, you can actually withdraw up to 25% of your annuity value each year, penalty-free.
Oh, wow. So they waive those surrender charges.
Exactly.
That's huge, especially with nursing home costs being so high.
It can really help to cover those expenses.
Yeah, absolutely.
Uh-huh.
Okay, so we've talked about, what happens if I need to take money out before retirement, but let's say I pass away. What happens to the annuity then?
So in the event of your death, your beneficiaries will receive the full value of the annuity,
Okay.
and they'll bypass any surrender charges that might have applied.
Oh, okay. So that's good to know.
Yeah, so it ensures that your loved ones receive the full benefit of your investment.
Right.
Oh.
Okay, and then we've talked a lot about the first 5 years. But what happens after those initial 5 years are up?
So at the end of the 5 years, you have a few options.
Okay.
You can renew the contract for another 5 years at the new interest rate that's being offered.
Okay.
You can withdraw your funds without any penalty.
Oh, that's...
Or you can convert the annuity into a stream of income payments.
Okay, so like a pension, kind of?
Exactly. It
Yeah.
would give you regular payments for a set period of time or even for the rest of your life.
Okay, so after those first 5 years, I can choose to keep it going. I can take the money out, or I can start getting regular payments.
Right, and it gives you a lot of flexibility depending on your needs at that time.
No? And what if I just completely forget about it? Like, do I have to make a decision every year?
So if you don't actively choose one of those options, the contract will automatically renew for another year at the current interest rate.
Okay.
And at that point, it's no longer subject to any surrender charges or market value adjustments.
Oh, so after that first 5 years, I don't have to worry about getting penalized.
That's right.
Okay, that's
Yeah.
good to know. All right, so, we've talked a lot about the features of this annuity, but I think it's also important to talk about the company behind it. Reliance Standard. Is this a company that people can trust with their retirement savings?
Yeah, absolutely. Reliance Standard is a well-established company. They've been around for over 100 years.
100 years.
And they have a strong reputation for financial stability and responsible investment management.
Okay, so this isn't some fly-by-night operation.
Not at all.
They've got a long track record.
Exactly. And that's really important when you're talking about something as important as your retirement savings.
Yeah, absolutely. And I think it's also important to remember that, diversified insurance brokers, they're not just like pushing this product on everyone.
Right.
They work with people to figure out, what their needs are and if this annuity is a good fit for them.
Absolutely. They take a personalized approach.
Right. Okay, so just to kind of recap here, the Reliance Guarantee 5 fixed annuity, it offers guaranteed growth for the first 5 years. Then it adjusts annually, but there's a minimum guaranteed rate.
Right.
You can access up to 10% of your money each year, penalty-free.
That's right.
There's the nursing home care waiver, which is great.
Yeah, a great feature.
Your beneficiaries receive the full value if you pass away. And after the first 5 years, you have some different options. You can renew it. You can take the money out. You can convert it to income payments. It sounds like there's a lot of flexibility there.
Yeah,
Yeah.
definitely a lot to consider.
And of course, if you're thinking about this, you can always reach out to Diversified Insurance Brokers, and they can help you figure out if it's a good fit for you.
Right. They're a great resource.
Okay, so I guess the big question is, if you could guarantee a portion of your retirement income with this kind of stability, how would that change your financial planning?
Yeah, that's something for everyone to think about.
Absolutely. Food for thought, indeed.
Mm-hmm.
All right. Thanks, everyone, for joining us for this deep dive into the Reliance Guarantee 5 fixed annuity. We'll catch you next time.
See ya!
Bye.